How's it going, everybody? It's Adam from Flagship Home Loans, and I'm here with my good friend, Zac Rank of Iron Valley Real Estate. Zac and I have been working together for, over 2 years now at this point. It goes real fast, yeah. And we just wanted to talk to you a little bit about some of the things we've been doing to help out our clients. But before we get started, Zac, would you mind just telling us a little bit about yourself, where you're from? And
and I'm predominantly down in but I do everything between Allentown and Philly and Reading.
you never know where you're going to see Zac.
No, you never know. I'm like later today I'll be in Philly, so from here to there. But I've been doing this business a long time. I love it. It's a perfect career for me because I'm motivated by helping others, and that's what brought me success.
Great. Well, thanks, Zac. We wanted to talk to you a little bit about some of the stuff that Zac and I have been doing lately that's above and beyond what I think the normal team of a real estate agent and a loan officer would do, because it really takes both of us to navigate these topics. And the first one that I wanted to talk about was appraisal waivers, okay? And for those of you that don't know, about 30% of loans or purchases where the buyer is getting a conventional loan and is putting at least 20% down, and actually sometimes 10% down, about 30% of the time we don't need an appraisal. And most of the time, loan officers only identify that on the back end after you've already had your offer accepted. But what Zac and I do is we look for those ahead of time. So, Zac, tell us a little bit about what you look for when you reach out to me for appraisal waivers. What are you looking for with your clients and your offers?
Right. So when I have that well-approved convention to you when we're making an offer and saying, hey, we're going to do full price and an escalation on this, and I want to know how high we can make this offer where we'll still have an appraisal waiver, if one will be granted. And having that information and knowing to what amount the lender was willing to accept the value from the beginning and not even require an appraisal is huge, because I can put that in the offer. I can tell the agent up front that this deal, if you accept it, has no appraisal, and that value is not going to change from a third party. Mm-hmm. So that's really important. So it gets us another step closer to an all-cash offer. Mm-hmm. That obviously doesn't have an appraisal.
Yeah.
There's other things. It's still mortgage, but a huge part of that process out.
I describe it as it takes out 1/3 of the scrutiny.
Yeah.
Right? Because we're looking at like the buyer's financials, and then you're looking at the collateral as well. And that takes the whole evaluation of the collateral right out of the picture, and we can move through a lot faster. It's cheaper for our buyers. But what's really important is that Zac can identify these opportunities.
Absolutely. And there's another piece here. I'm escalating an offer, say $50,000, and there's no appraisal waiver granted. In that situation, now the conversation with the client is, all right, if it doesn't appraise for that 50 grand over, are we going to offer the seller to cover that $50,000 gap?
Yes.
And that can get expensive, but that's what buyers are doing. That's how they're winning bids. So if we can come in and say, hey, there's no appraisal at all, then I don't even have to worry about gap cover because no appraisal.
Right.
The lender said there's enough data in the market, and we're confident in this credit profile and the data of the comps that we don't need an appraisal. We've accepted the value.
Right. I'm glad you brought that up, because that leads into the second point that I wanted to discuss that Zac and I do a lot for clients, and that is showing appraisal gap coverage to our buyers with little to no risk for them. Yeah. And what we're talking about there is anytime we have a buyer that is putting more than minimum down, we have some room there, whether it's $1,000, $10,000, whatever it is, we have some room there to add appraisal gap coverage at no risk to our buyers. Now, it's an abstract concept, but really what we're doing there is when the house appraises for a little bit less and we have more than a down payment to cover that difference, all we're doing is taking some of that down payment money and absorbing that into the LTV. So our buyers are still coming to the table with the exact same amount of money. Our buyers are still having the exact same monthly payment because their loan amount hasn't changed. Now, sometimes that could change mortgage insurance. That's for me to help navigate. But what it does is, and I think the important part here, Zac, is that I present this notion to them.
Absolutely.
Because if you bring that up to them, all they can think about is, well, why would I pay more for a house than what it appraises for, right? Now, if I bring that concept to them and I explain it to, hey, you can improve or strengthen your offer without having any risk. And what I say to them is, it's not that you're buying the house for less than it's worth. When you buy that house, that's the market value for the house. All, rising tide raises all ships, right? But what I tell them is sometimes appraisers have bad days. Sometimes appraisers don't have good comparable properties. And, right, especially when we're in a more rural area or it's a more unique property, it's not always easy for those appraisers to get to that value that they're trying to get to. So this is just another strategy where, again, it's okay if you don't understand it. I will explain it to you. The biggest thing, your takeaway is anytime that you have a buyer that's putting more than the minimum down payment, we can build some sort of appraisal gap coverage in there that has no impact on our clients. And if we're not doing that on our offers, we could be leaving some money on the table.
Yeah, they need to know where they are. Like the best team for a buyer is one where their agent and their lender work together and provide these options, include them in on what's possible and what the impacts are.
Yep, absolutely. It's all about teamwork. Good stuff. And then lastly, I just wanted to remind everybody, there's a great state program in the state of Pennsylvania. It's called the NHS, National Housing, I forget what the S stands for, subsidy, National Housing Subsidy. And it is for first-time home buyers in the state of Pennsylvania. It provides money for down payment and closing costs. Down payment money only on the conventional loan, but it provides money for closing costs on FHA loans. And if you meet those requirements, first-time home buyer. But remember, it doesn't mean that this is your first house. It just means you haven't been on title in the past 3 years. So, you can use it again. And it's a great second mortgage that allows our buyers to pay down interest rates, get cheaper money that way. And it's one that I've been using for about 6 months now, and it is fantastic. So make sure you're reaching out to us with your first-time home buyers. I'd be happy to price that up for you.
Yeah, I haven't personally used that one with you yet, but I have it out on my radar. And again, in my toolkit for those buyers, that's a massive help where I don't have to go for a seller credit.
Yeah.
We can go and use the subsidy.
Yep, absolutely. Well, thank you so much for coming in today, Zac. Always appreciate you.
Thank you.
And have a great day, everybody. Thank you.